Shelley. Welcome back to another segment in our Contractor Liability Insurance Series.
Thank you.
Yeah. Thought in this segment we could kind of give a little bit of a general overview, and maybe we could start with what is general liability in this arena?
So general liability insurance is your protection or the insured's protection from third-party claims from outsiders. So from homeowners, from definitely from employees of the subcontractors or anyone else that's on site that is injured, or later when there might be a construction defect. And there's actually basic two sides of general liability, which is your premises liability and your operations during the construction. So that's one side. And the other side of it is the after construction portion, which is where you're going to have that homeowner complaints afterwards and possibly construction defect or, design errors and things like that come up. So it's third party suing you. And there's no benefit to the insured other than it pays out on their behalf. So it's nothing that they can collect money from. It's actually lawsuit protection, defense costs, and judgments that are made against them.
Okay. This is probably a really silly question, but how important is it for the agent to know the types of projects their customer works on?
Oh gosh, absolutely. So with a general liability product, they start with a basic form, and it's the same for everybody, if it's an apartment, gas station, or a contractor. And then the way we contain price is that we modify those policies with exclusions and limitations that bring it back in. So the only way you can do that effectively is to understand what the client does. Yeah. So if they're building condos and townhomes, or working as a subcontractor with builders that are building townhomes and condos, then you need to make sure there's not an exclusion for that. But if they aren't doing that, and they're only doing, say, straight single family, then you could put that exclusion on it and then drop the premium down dramatically for that. So as the agent, then the agent needs to actually question that insured. The best thing that I know that I do is I ask them what builders that they're working for, and that gives me a lot of insight knowing all the local builders, and I look up their projects. Are they, what kinds of things are they doing? Because sometimes the builder doesn't even actually know. They get their request for proposal, and it, for example, might look like single family, but it might be open air condo. And maybe they have a condo exclusion on their policy, but they're single freestanding homes with the condo association tying the whole project together for the common areas and the land and streets and detention ponds. So they actually have an exclusion for it, and they don't even realize it.
Yeah, I could see that.
Yeah.
So say I come to you, trade contractor, we have a discussion, and you insure me in the channel I say I'm working in, and I go out and decide to do a one-off type project.
Right.
How much exposure have I opened myself up to? Is there some level of coverage in my policy, or am I just out there hanging in the wind?
You definitely end up hanging in the wind. So what happens is that you fill out a contractor questionnaire, and it asks, what percentage of your business is, townhome, single family, custom, the different types of product. And if you say you don't do any of that, then that means to us as the agent and to the underwriter, we can put an exclusion or limitation, contain your costs up to what you said on your questionnaire.
Save me a few bucks,
right.
But I better not do it.
Yeah.
Okay.
And then there's an application warranty that says, you haven't misrepresented that. In every policy, there's a clause that says if you've not given proper information to us, we can deny your claim. In addition to the exclusions that are quite likely have been put on there to contain the cost of the policy. And it's really important for the subcontractor to understand that. I have situations like this often where, we have a separate risk management company, and we actually clear the subcontractor certificates for the builders and review those exclusions. And I can't begin to tell you the number of times that we have to call the subcontractor and say, hey, you have an exclusion. And most of the time they have no idea.
Wow.
It's terrible. Yeah.
Yeah. I appreciate you covering that.
Yeah.
Could you speak to auto liability? It sounds like that might not necessarily be covered in general liability.
No. So a general liability policy is basically the catch-all. That's why it's general liability, right? So you purchase things separately: auto liability, workers' compensation and employers' liability, pollution, errors and emissions are all specialty lines of liability insurance. And then you buy the general liability that's kind of like fills all the gaps of that. It's your basic business liability. So auto liability is specifically excluded under a general liability policy, and it gets pretty sticky on a job site because you're driving around on the job site And things definitely can happen. And there's an exclusion in that policy. So you actually have to have auto liability. In addition to, in Washington, and this is different by state, but most follow the model that the liability or the legal liability actually follows the owner of the vehicle. So the first person in line, if there's an accident and someone's injured or damaged from that, it's going to go directly to the registered vehicle owner first.
Follows the vehicle.
Right. And then the driver's involved, and then it would go to the general contractor on the site because they have the strict liability for the safety of the job site, control of it. And then it would start trickling down to the subcontractor who, so that's kind of the strict liability. And then they have civil liability. So the subcontractor then isn't the strict liability because they aren't the general, but they're going to get involved in it. Oh. And so when we're asking in the subcontractor agreements, we require auto liability because they don't get there on Metro.
Yeah.
Right.
Yeah.
So they're coming to the job site, they're parking adjacent to it, or in a situation, a lot of them just are parking literally on the job site. And that's where that crossover, the general contractor doesn't own those autos. You can't insure someone else's auto, just like you can't insure your neighbor's house. Okay. So, and if they don't have owned autos, you buy what's called non-owned auto coverage, which is basically the same thing that protects the policyholder that owns the policy for any auto liability claims that they're brought into, named in the lawsuit. Okay. And then, but they don't own any autos. And those policies generally run 200 to 300 or 400, 5 maybe, depending on the carrier. Yeah. And that's a huge, huge exposure for a subcontractor because they have all their employees and any lower tier subcontractors that are being hired underneath them. And they're responsible for those people that they've hired because they've signed a subcontractor agreement to the general saying we're going to indemnify you for anything we're responsible for, right? And indemnify means to pay back. So that non-owned auto policy is their way of providing insurance for that risk.
In case, yeah.
Right. Yeah. And we get often where the sub is, I don't have any autos, I'm not going to buy that. And I'm like, you don't understand, you need this coverage. It really actually is a huge risk for them. Yeah.
Are autos looked at differently than construction equipment on the site? And
yes.
How do you insure that, or is that under the general?
The equipment is actually covered under the general liability, but if it's licensed for road use, it goes under the auto liability. And there is some crossover where we have to look at things differently with tractors and things like that, depending, and also different trailers and things. So like a trailer that's being towed by an auto goes under the auto.
Okay.
Versus, so if they're self-propelled, that's general liability. And if they're attached to an auto or licensed for road use, they go under the auto liability.
Okay. With respect to the general liability insurance policy, say I've got a decades-long career as a trade contractor, all of a sudden it's enough, I'm hanging it up, wrote you my last check, and I'm not doing any more projects. How am I covered beyond that date for a certain amount of time? And what's that look like?
So that's kind of a twofold question, because in Washington, and each state is different, but in Washington, there's a statute of repose, which is basically a timeline. That's all it is for which you can be sued. We're actually blessed because ours is only 6 years, where most states are 10. Wow. So that's better. But we also have stricter other laws that actually we're one of the hardest states to insure. So in the scope of states, we're in like the top 5 hardest to insure because our actual obligations under that are stricter. But there is a 6-year tail. So when someone goes out of business, then they still have to worry for 6 more years whether or not they have coverage. So there are 2 types of general liability policies. There's an occurrence and a claims made. And an occurrence policy, when you buy that, it means you can make a claim against that policy forever. There's no limitation as to how long you can make a claim for it. On a claims made policy, you actually have to have the event that gives rise to the claim and make the claim during the policy. So as a contractor, you absolutely never should buy a claims made policy for general liability. Then on the policy itself, the policies pay for occurrences that happen during that policy term. So if you're out of business at, say, 2000, just for sake of something, and then a claim comes in because it's water damage and it occurs 3 years after the fact, you say you finish up construction, your job is done here, and then the claim comes at year 3
Yeah.
after that, and you didn't renew your policy, you don't have coverage. So you need to keep trying to renew your policy as long as you possibly can at the end. And it's just an inherent risk at the end, and it's difficult to manage. But it's something that when you know that you're going to start winding down, you need to start having that conversation with your agent as soon as possible so they can help navigate that. It's our worst nightmare when someone calls and says, hey, I'm going out of business, cancel my policy. And we're like, whoa, hold up. You don't want to cancel your policy.
So it's
you
a
are
wind
ending.
downs. Okay,
Yes.
I did not realize that. So I'm not doing any work for 6 years. I want to try to keep my policies in place.
To continue the occurrence coverage. It's not about the reporting, because you can report a claim against the policy as long as possible, but the occurrence date is the loss date, and the loss has to be within the policy term.
Okay. I thought we could wrap up the segment talking a little bit about what you mentioned, a stopgap insurance and why that's needed.
Right. So in other states, you have the ability to voluntarily go out and purchase your workers' compensation and employer's liability as a combined policy. And you can go to the free market and you can shop that and get the most competitive price. In Washington, you're forced to buy labor and industries unless you're big enough to self-insure, you have to be really
Pretty
big.
rare.
Yeah,
Okay.
really big. So basically, they only provide workers' compensation coverage, which is your repayment for your injuries and some time loss and things like that. Employer's liability is actually what stopgap is, that you're missing, and for instance, another state, then you would buy as a combined. So it's filling that gap that L&I doesn't provide. And then it's liability for anything that's basically missed under the workers' compensation, loss of family, loss of enjoyment of life, different things like that go into the stopgap, or even bad reporting, things like that.
Okay.
And it's cheap. It's like $150 a year. It's not a big deal.
Okay.
Yeah, but they need it.
Yeah. It's great information. Thank you.
You bet.